Hey traders, welcome back to the first Forex market preview of 2017. If you guys are new, my name is Akil Stokes, former consistently unprofitable trader, now full-time professional trader and trading coach over at TradingPower.com. And this is a video that I put out for you guys on YouTube each and every Sunday. Now, the beginning of a new year is always an interesting time. We all know what happens at the end of the year, right? We make these resolutions. I'm gonna take on this type of diet. I'm gonna lose this much weight. I'm gonna go to the gym. I'm gonna do this. I'm gonna do that. I'm gonna do that. All of the trading mistakes I made in 2016 are going to go away. I'm throwing them out the window. I'm starting fresh. This is gonna be my year, right? We do that all the time. We pump ourselves up. We do that rah, rah, rah type of stuff. But only a small amount of us actually take action. And unfortunately, what you see, just like those other resolutions of dieting and going to the gym, as the new year begins, everyone's fired up, right? Everyone's ready. They start off fast. They start off fresh for maybe the first couple of days, couple of weeks if you're lucky. And then eventually, right? Eventually, we go back into our bad habits. And before we know it, we're ending another year doing the same exact thing we did the year before. And it's the same in trading, right? I've already spoken to a few traders who have told me, Akil, I've already broken down. I've already made psychological mistakes. I spoke to one trader that lost 20% in the first week already. And what happens is we always, I guess, we crave this instant gratification. If you're gonna be a professional trader, trust me, there's no such thing as instant gratification. But what I mean by that is, we say we're gonna fix this, we say we're gonna do that, we start implementing whatever we implement, and if it doesn't pay off right away, we quit, right? You guys have been there before. You get all fired up about a strategy, you trade it, the first 10 trades don't work out in your favor, maybe you only win 3 out of 10. What do? You dump the strategy and go to the next one. Oh, the strategy's not working, the market conditions aren't right, I'm gonna do this stochastics cross instead. Maybe that goes well for the first couple of trades and eventually that goes down as well. And you have that cycle of trading something and it goes into a drawdown, ditching the system before it has a chance to prove profitable, going to the next system and then trading that system into a drawdown as well. And I'm gonna share some bonus footage at the end of this video of a discussion we had about that in the live room. But the key is you have to be patient, right? A lot of the mistakes are made not because of the trading strategy. Sure, that's part of it. Traders do make mistakes. I even make mistakes, right? But most of it comes up here, right? In those 6 inches between your ears, trading psychology, self-sabotage. And because traders don't have a lot of confidence, not a lot of faith in themselves. And that's for a few reasons. Most traders don't take the steps necessary to really build that belief system before actually trading. But a lot of it is just trade management. A lot of it is just traders freaking out while in a trade and cutting themselves short. So if you are that type of trader, or if you feel yourself on the verge of being that type of trader, here's what you need to do. You need to find yourself a support system, right? You need to find yourself a place where you're going to be held accountable for your mistakes instead of just holding yourself accountable, right? We all know how that goes. It wasn't really a mistake because the markets were moving trendy and, blah, blah, blah. Whatever excuse you find not to put blame on yourself, you will. So you need to find other people that are going to hold you accountable. And I think one of the best places for that is in one of our live trading rooms, guys. We have 2 live trading rooms, a London session and a New York session, where we have about 50 traders and a trading coach trading 3 hours a day. It's a great community, lots of eyes on the market, lots of positive messages, lots of positive help for not only myself and Jason Greystone, but also our traders in the room. And what it does is it puts a kind of a pressure on you. It puts the pressure on you to follow your rules, be honest, and be accountable for what you're doing. And for many of you, that's the last little kick in the butt that you need to stop you from taking those profits early or stop you from moving those stops back, right? So I definitely recommend that you try that at some point this year. And I'll tell you what, if a live trading room doesn't fit your schedule, check out our Syndicate program. It's not exactly the same, but you still get that motivation in our weekly, or our daily War Room video and our weekly videos as well. And I'll tell you this, I remember a couple years ago, talking about the Syndicate program with Jason Stapleton and some of the changes we made. We decided to start tracking our results, and we were very hesitant on doing that because we didn't want to turn it into a signal service. We didn't want to make traders think that they can come in and just blindly follow whatever we're doing and find success that way. That goes against everything we stand for as educators. But we also want to show you what the reality of trading looks like. We wanted to show you that trading isn't a come in every day and make lots of money like you hear out there on the internet, right? I was talking to a trader, another professional trader on Twitter, and he said, I've never seen a Twitter person lose a trade. Right? Amazing. These guys are the best, right? You don't get that type of stuff out there. The reality of trading is each and every day is a grind. There are going to be very good times. There are going to be very bad times. And there are going to be times where you come in and it just seems like you don't know what you're doing. And being able to watch professional traders go through that throughout the year is very empowering because it doesn't make you seem alone. It's not just you. We're all doing it. The difference is we're able to stick with it while most traders out there bail and quit on their system. So if you can't make the live trading rooms, I recommend signing up for the Syndicate. Donate your $1 for 30 days and check it out. And I'll tell you what, if you like what you see, if you think it's gonna be a help for your trading, commit for the entire year and save yourself about 50% of what it usually costs. Now, let's get into the charts. I went to social media this weekend. I put a question on the Twitter, on the Instagram, on the Facebook, asking you guys what pair would you like me to discuss. Over 25% of the vote came back for the dollar yen. So that's what we're gonna do. All right, let's take a look at the dollar yen on the 240 chart. That's the 4-hour chart. And this was actually one of the busier pairs that we had this week. There were two advanced pattern formation completions. There was a bullish bat formation right up here. There was an X to A to B, B to C, a C to D right there. That pattern ended up losing, but we also followed it up with a bullish Gartley completion. X to A to B right down here, B to C, and C to D a little bit lower. Technically, I think it was up here. I ended up taking it closer to the 115 even handle just because of risk-reward reasons. But you can see that almost hit target 2 as well. So not a bad double right there. But let's start off by looking at the daily chart. And this was a pair that I started off the week. I shared this idea on TradingView here. I also shared it with our syndicate members, talking about how dollar yen was at a decision point. We were coming up to retest previous structure highs here. And we talked about using that if-then thought process. If price action were to give us a higher high, higher close, then we can certainly look for a trend continuation opportunity up to our next level of structure, right below the 122 even level. However, if we get a failure, then we're likely to see a double top, and you can see that's exactly what we got. Now, because of the placement of this double top, it wasn't one that I was interested in taking short. And when talking to our traders about this in the live room, I said this is an opportunity because we're not really at a structure level where we can feel comfortable about predicting a reversal. This is one where you may want to take a more conservative approach. And that conservative approach would be in the form of a 2618. So if you look here, you'll see that, let's mark off our double top, boom, the market came up, we double topped, meaning that we made a run up, we rallied, we retraced, we came up to test that level of resistance, we failed to get a break of it, a break and close above it, and then we made a move to the downside going past the peak of our double top, the retracement in the middle, I guess. I don't know a word to explain this. I want the V point, but then that doesn't work if it's a double bottom because it's an upside down V. So I don't know what to call it, but this middle section, the retracement of the double top, is what you're looking for the break and close to come beyond. And then for the 2618 trade, what you're anticipating is a push back into that double top and a chance to get short on more of a conservative approach, right? And if we go down to our 240 once again, our 4-hour chart, and actually, well, we can go down to that. Well, let's go to 240 first, and then we'll go down to the hourly. If we go down to our 240 chart, you'll see that there's actually a potential 2618 within this 2618. So we have the bigger 2618 opportunity here. If you look right here, this is actually a smaller double top as well, right, in here, giving you a second potential 2618. Now, for the 2618 trade, what we're looking for, we call it 2618, the first part. The 2 is for the double top or double bottoms. That's for the 2. We're then looking for a 618 retracement, right? So we're taking our Fibonacci tool, we're drawing it from our swing high to our swing low, and we're looking for a move to that 618 retracement to be our entry point. Now, there are lots of ways you can trade this. Like anything we teach, there are very, very aggressive ways where you can just simply put a limit order right on that 618 and say, you know what, as soon as the market touches it, I'm getting short. Or you can take a more conservative approach where that 618 mark, right, that represents the start of your potential kill zone. And then once or if price action gets within that kill zone, then you're going to one of your reasons for entry to actually involve yourself in the trade. And of course, you can approach this differently depending on the situation. This looks like one where, and I know Charles does this a lot with measuring out risk reward. He takes an aggressive approach towards it. This looks like one where the risk reward should be 1-to-1. If we're taking targets right down here at a retest of structure lows, let's see. I love this tool on TradingView. I'm not sure if Ninja 8 has this, but I love this tool where you can just measure out 1-to-1, right? You see the section in here. This is kind of measuring it out for me. Right? I know that if I want to have a 1-to-1, if I entered aggressive right here at the 618 retracement, right at, what is this, 117.32, and if I wanted to have a 1-to-1 risk reward, that means my stop loss, right, could be as high as 119.22, which is probably as high as you want to have it. It's above that 119 even handle. So you can certainly get a 1-to-1 risk reward if you're trading this aggressively by just taking a limit order at that 618. Now, if you want to take a more conservative approach, meaning if you didn't want to just enter at that level, you want to kind of find a reason for entry within this smaller kill zone, I would recommend going down to the hourly time frame, going down to that lower time frame where there's a more detailed look at the market and start making some predictions. Now, right now it's really early, not sure what's going to happen, but the first thing I would do is I would take my Fibonacci extension tool and I would invert it from the previous swing low to the previous swing high. So I'm drawing it on backwards and looking for that 1618 Fibonacci extension level. Let's go ahead and put a horizontal line there in the market. Boom. Now, if you notice, right, if you're familiar with how to read a price chart, if you're familiar with how the markets move, right, when the market is moving evenly, equally, nicely, whatever word you want to insert, we often get equal measured moves. And you can see we have one right now. If I take my line tool here and I draw a line from my bottom swing low to my swing high right here, and then I go ahead and copy and paste that, right, you'll see that the second move up was essentially the same length as the first move. It's not always going to be exact. There's very, very rarely are the markets exact, but you can see it's essentially the same length as that first move. And you can look at this as an ABCD pattern or an equal measured move. Now, here's the thing. A lot of traders will only look for equal measured moves in the extensions, right? These bigger moves, right? You can also, however, look for equal measured moves in the retracements as well, or the pullback. So if we look at this right here, let's go ahead and make this, make it black. If we look at the pullback of our first move here, and let's say we anticipate the market giving us an equal pullback, right? That would put us right here. Probably not a bad spot. Doesn't look like much here on the hourly, but this is going to be an even smaller pullback on a lower time frame, say a 15 or a 5. Regardless, right? If we get one more equal extension up, that equal extension, ta-da, it's going to put us right at that 1618 inversion. So is this going to happen? I don't know, but if you're looking for a more conservative entry, remember our kill zone is right, let's draw this kill zone back. Our kill zone is right in here, going from our 618 all the way to our structure highs, and our initial risk reward from taking it 1-to-1 look to be about right here. What's it, 119.20s? We had it at something right around there, right? If you're looking at your initial risk reward being like that, and you're someone that wants something a little bit better, you can go ahead and say, well, what if I take it at the 1618 Fibonacci extension, which lines up with our 786 retracement, which also lines up with a third equal measure move here. You can just see the difference that it's going to have on your risk reward. If you take the same exact stop, you're just giving yourself a better entry, which means more potential reward, less potential risk. Now, again, this is just a different way to approach it. Before you get all fired up and say, Akil, that's the one I want to do, more risk, less reward, whoo, yeah, right? Keep in mind, there's a give and a take to everything in trading. And what I mean by that is whenever you do something, you sacrifice something else. So in order to get this better entry where you give yourself less risk and more reward, woo, right? What we all want as traders, realize this. If the market comes to the 618 retracement right here and falls off a cliff, guess who's not going to be involved? You as a trader. The one that took it aggressively at the 618 is going to be involved. So by waiting for that higher entry, you're giving yourself the chance to potentially miss that trade. And vice versa. For the person that's taking it at the 618, you give yourself more opportunity to be in the trade, but you're giving yourself less risk, or more risk, less reward. You're also giving yourself the opportunity that the market may shoot straight up. You'll never get that. You'll never get your entry reason if you're looking for a conservative entry reason. And for the trader that is looking for that conservative entry reason, they never got into the trade. So I know that's a lot right there. I don't mean to get too much involved in here, especially on these type of videos, but I do want you to understand that there is no one way works for everything. There's always a give and a take. So whatever decision you decide to make as a trader for any technique, not just the 2618, understand that when you do something, you sacrifice something else, right? When you do something else, you sacrifice something else. So don't waste time, don't waste energy, don't waste money trying to look for that perfect system. The best thing you can do is have a way that you like to trade it that way consistently, right? And deal with the good and the bad, knowing that if you consistently execute it, right, you're going to see more good than bad, especially if you did your homework before deciding to trade the strategy live. All right, gang. Now, if you like that strategy, that 2618, and you want to know a little bit more about it, make sure you go over to our website, www.tradeempowered.com. Click that Learn to Trade tab at the very top. And if you scroll down, right, there's a free training on the 2618. That's right, a free training for all you guys that yell and complain about, you guys charge for educational services and this and that, yet you watch our free YouTube videos every week. Free training. Check it out, learn how to trade that strategy, and then again, check out our Syndicate program because this is one of the main strategies that Charles trades each and every day. So when he comes in for his morning war room meeting, he's typically looking at a 2618 opportunity during there. And Charles also, he's been working with this strategy for a while, so he has a few twists, a few filters that he adds to how he trades it, and that's pretty important to see if you plan on making that one of your main trading strategies. So I appreciate you guys joining me. As always, do me a big favor. If you love this video, hit that like button. It takes a second. If you're new, subscribe, and certainly leave a comment. Ooh, look at that voice. Certainly. Getting over a cold here. Certainly leave a comment underneath. I will be doing a series of videos called Ask the Trader, where there are short videos answering some of the questions that you guys have been leaving here on YouTube. I typically respond by writing them out, but I think it'll be a bigger reach by just recording a quick video. So leave a comment and of course share this on social media, Twitter, Facebook, Instagram, wherever you're at, share it. Let's bring traders in, right? The more traders we have watching this, the more and better content that all of the coaches here at Trade Empowered are able to produce. So if you do all three of those things, like, subscribe, share, 4 things, and comment, I'll be back next week with another awesome video for you. Until then, plan your trade, trade your plan. Good luck in the markets this week, guys. Take care. Right. So our syndicate equity curve looks like this every year. And last year we had some of that during the summer. And then we go up here and like that. That's about what last year's syndicate equity curve looks like. And what happens is we have people that join our syndicate program or join the live room at all points during the year. We're going to look at pound dollar 15 for a potential bear bat coming up as well. We get people that join during all parts of the year. So we'll have people that join beginning of the year and we catch a hot streak and they're like, oh man, this is awesome. I blindly followed you and I made this much, right? We'll people that join in here. But then we'll get people that join about right here, say it's a quarter into the year and we do a video. Hey guys, it's been a great first quarter to the Syndicate year. We're up 20% in the first quarter. This is awesome, blah, blah, blah. Come in and check it out. So you get people by this point, right? This point in their trading, they're a quarter in. What do you think most people are doing a quarter into their trading, 3 months into their trading? You think they're up money or down money? What would you guys say? It's an easy answer because 90% of traders fail in 90 days. Or was it 90% of traders blow 90% of their funds in 90 days of trading, something like that? So most people are down, right? So maybe they might be down 20% if they're lucky, right? So they're saying to themselves, oh, I got to find a quick fix. This year's not going good. I got to find the shortcut. There's got to be a shortcut to making money. Let's join this syndicate. These guys are up 20%. I'm just going to I know they say it's not a signal service, but they can't see what I'm doing. I'm going to follow everything that they do. And then guess what? They join right here. And what happens as soon as they join? You hit the drawdown, right? Now to us, right? The drawdown is not a big deal because, we've been trading the first half of the year, the first quarter of the year, and it's a corrective wave essentially, right? But for them, this is their beginning and they caught it right on the downslope. And that's when you get the emails complaining, oh, you guys stink. Your program isn't successful. I followed everything you did and I lost money. Now I'm down 50%. And then they quit right here because we sent them an email saying, well, it's not a signal service. Maybe you should have a plan instead of just trying to blindly follow everybody and blah, 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 blah. And they quit right here. And then guess what happens after here, right? Drawdown's over. You start making new equity highs and then they miss out on that. And you see the same thing with systems. It's the same thing with systems as well. It's not just Syndicate. Same thing with systems, right? You trade a system, it starts off well, right? And then your system hits a drawdown. And what do? You lose focus in your system. You say, oh, I lose faith in it. It doesn't work. I'm going to quit my system and try something else, right? So if you would have stuck to the system then puts in new equity highs and it continues this kind of ebb and flow throughout the year. But when people quit, they quit right here. They start a new system, right? Then the new system goes into a drawdown. And then they quit and they start a new system goes into a drawdown, right? They quit every time during the drawdown and never have a chance to take advantage of the upswings. All right, you see it all the time. It's a shame that it's so simple, right? It's a shame that we can talk about this so casually, right? Like it's, hey, yep, that's what happened. But that's the cycle of traders, right? That's the main difference between a professional trader and a novice trader, right? A professional trader, they're doing something like this, right? Trade well, suffer through the drawdown, maintain, live to see new equity highs, right? Suffer through the next drawdown, maintain, live to new see equity highs. Suffer through the drawdown, maintain, live to see new equity highs, right? The failing trader, right? Drawdown, quit system. New system does good, drawdown, quit system. New system does good for a little bit, drawdown, quit system. New system does a little good, drawdown, quit system. Drawdown, quit system, and so forth. Until they eventually hit margin call, crash and burn, or just keep slowly bleeding. Some people just slowly bleed forever. It's a shame. Yet, that's the harsh reality of trading. And many of you guys are shaking your head. Many of you guys have been there before. Like, yeah, that's me. I've quit my... Give me a yes if you've ever had a trading system and you've lost faith in it and decided to quit. I'll be the first one to type it in. I have. Yeah. It's tough. That's why, that's why we got to go through that belief, action, result cycle. Belief, action, results. And it all starts with belief. This is why we spend so much time, right? This is why we spend so much time working on the basics, so much time prepping, So much time back testing, so much time forward testing, so much time demo trading, so much time reback testing, right? You're putting all of the work in up front, right? You're building the strong foundation for that house, that trading house, growing that belief, growing that belief, growing that belief. Because as long as you have that belief, right? And of course, your system actually has to be good, but I'm assuming you wouldn't have the belief if your system is good. As long as you actually have that belief, right? You're going to be able to withstand those drawdowns mentally. It won't be easy, but you can. And then once you do it for the first time, right? That belief will cause you to take the right actions, which is withstanding the drawdown. That right actions will eventually yield you the right results. And once you see the right results, what do you think that does to your belief? Does that increase or decrease your belief? It strengthens it. Yeah, then you get stronger and stronger and stronger. Now you're even more confident in yourself. You got to make sure you don't become overconfident. That could be a problem, but you're even more confident. Now when the pip zombie on the trading forum is like, "Oh man, you took 3 trades in a row, Ron. Haha, you suck, man." Right? No longer does it bother you. No longer do you start, do I really stink? Am I really bad? No longer do you question it. You're like, all right, we've been through much worse. We've been through much worse. That's why trading is so tough. It's not about what's on the charts as much as it's what's in the 6 inches between your ears. That thing you call a brain. That's what separates the winners from losers. All right. Potential big bat formation here on pound dollar daily.